All right, guys, back to work. Hope you guys had a great day out there. What a wild trading session comes to an end. But it's back to work. Wednesday evening, we're getting ready for Thursday's trading session. We have a lot to cover in tonight's video newsletter. Had some nice big moves on the charts today. Get some pumps and dumps on the S&P and the Nasdaq, and a beautiful grinder higher on the oil. So lots of important trades I'm tracking for tomorrow. Looking forward to a very good day tomorrow in any of these markets. I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. As always, though, before we jump in and get this party going, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And I really appreciate you tuning in tonight. I know a bit late on the video, so thank you so much for tuning in. If you enjoy the video, do me a favor, hit that like button. I appreciate you guys tuning in and supporting the YouTube channel. But enough of the intro, right? Thursday is not going to trade itself. We got some great trades setting up for what might be another wild trading day on Thursday. Boy, what a wild session today, right? We got that deep pullback and that jump that we talked about in last night's video. I'll tell you though, bears have all of the control right now on the S&P and the Nasdaq. Lots of bearish momentum in the short term right now. There is a lot of potential as the market popped and then dropped for some breakouts going lower. So some really nice breakout opportunities, got some range rotation, get a pendulum swing coming off the high. So a lot of potential breakouts to the downside for the bears right now. And you can see I've got some key levels up overhead as well. I would love to get some pullbacks here as well. Plenty of ways to short the bounces here on both the S&P and the Nasdaq. It's not easy to find a good long trade right now. I'm not going to sugarcoat it. It's not easy to be a buyer right now in these markets. You'll see why tonight. But, I'll make sure we cover some long sign trades if the situation does present itself. But very, very bearish right now and a little bit difficult to find some long trades. We'll talk more about that here in a moment. Oil is a very interesting chart tonight. You're going to want to stick around and watch the video tonight for oil. We're definitely bullish right now on oil. We talked about that kind of slingshot breakout in last night's video. But I'll tell you, though, it was a big move up today. There's a range on the chart, and there's a lot of overhead resistance right now. We definitely have some pullback opportunities. We definitely have some pullback and some breakouts because we got that 90 big round number overhead here. But I'll tell you though, if the buyers, if they're not careful right now, we might get one of those slingshots and we might be in store here for a possible surprise, the downside on the oil. I know it seems crazy right now, but when you see the stuff I'm looking at on these charts here, you might agree with me by the end of the analysis on crude tonight. So a lot we're going to cover from start to finish, S&P, Nasdaq, oil. Before we jump in and talk about all my favorite trades for tomorrow, let's make sure first of all we all get on the same page here for tomorrow. Tomorrow, of course, is the 27th of Thursday. There really is one big news event tomorrow, and that is the third quarter GDP. You get the GDP coming out for the third quarter at 8:30 Eastern time. That will definitely be the biggest news of the day tomorrow, that at least we know about right now. We also know, of course, the next couple days we're going to the end of the month, so we do expect there to be a little more of an uptick in volatility, right? Keep it in mind, volatility has been a big part of this week so far, so definitely be expecting to see an uptick in volatility. GDP is the big number for tomorrow. That will be the big headline number. And again, we do definitely have more earnings tomorrow. We've been talking about earnings all week. The most important thing right now is no matter what earnings are coming out, be very careful in the pre-market before the open. And as we've seen over the past couple days, that last hour of trading can be very, very violent, right, with that price action, especially tomorrow. You can see we got just a couple names you might recognize tomorrow: Apple, Amazon, Intel, some of the biggest companies by market cap on the planet. And so we definitely have some big stuff coming tomorrow afternoon. So be careful, especially on the Nasdaq, on the into the close, right? That last hour or so. Be very careful tomorrow. We got some big energy names coming on Friday, so we're not quite done. But by the end of the day tomorrow, though, we will have squeezed most of the earnings out of this season here, and we got a little bit left over next week. We'll talk about that more tomorrow night and the game plan for that. But be aware of those earnings. So GDP tomorrow at 8:30. Earnings before the open, earnings after the close. And we, of course, as always, remind you that the news, right? News is noise. News is a great catalyst, but the money is made off the charts, right? The money is made by finding levels, tracking momentum, finding entry setups, and so we'll talk about all the best trades here tonight. Now, I'm going to cover all my favorite trades on this video here tonight. Make sure you watch all the way to the end of this video because you'll learn something new throughout every step of the process here tonight. I'll provide different trade ideas, different advanced tactics, and you know me, I try to save the best stuff all the way to the end, so I'll give you reason to stick around all the way to the finish. I'm going to go S&P first, S&P, SPY, we'll go S&P NASDAQ, and we'll wrap things up, of course, here on the crude oil futures here. Now, a couple things. First of all, tick charts. These are all going to be tick charts. You're more than welcome to use a time chart if you want. I use tick charts in my trade room. You can see all the time frames in the upper left-hand corner. Also be aware, too, the E-mini can be applied to the SPY, the SPY, and it can also be very interchangeable right now to the NASDAQ and the QQQs. So bear with me, right? The S&P and the SPY, the NASDAQ and the QQQs, they're all very similar. They're a little bit different tonight, but they're all very similar. So they're pretty much interchangeable. So everything I talk about on this chart can pretty much be applied to the NASDAQ and the QQQ as well. So be aware of that. There are 4 key insights right now that are tipping me off to where the best opportunities are going to be for tomorrow. The first one is a bull bias. Bull bias doesn't look very bullish right now. Now on a 4-hour chart, though, open a 4-hour chart, and you will see we are very bullish as we rotate off that range low on a 4-hour chart. We're pretty bearish right now, but that tells you that this could easily change back to bullish tomorrow, especially with those big earnings reports coming out tomorrow. Next one here is a strong move higher, right? They made a real strong move there. We talked about this last night on the video, right? Last night on the video, we talked about that big move up, that deep pullback, trapping in those bears, and that retest of the high. If you watched last night's video, this is kind of par for the course, right? It makes perfect sense of what happened today. However, they definitely have a very strong move going higher, and that strong move, remember, anytime we see a strong move in one direction, we know there's always a good chance we're going to see at least an attempt to go back and retest that high. Now, once they go back to retest the high, this is where the fun starts, right? Now we can look for shorts off like a double top, right? Or a breakout going higher. Now, it does seem a bit unrealistic for a breakout going higher right now, considering the size of that move going lower, but that's the general idea. Anytime I see a strong move in one direction, I look for a deep pullback or expect a pullback and a retest of that high. And then from there, do we short off that high, which I love for tomorrow, or do we see a breakout going higher? And you can see we've got some more levels waiting up overhead here, 39, 36 and a quarter, 39 and a quarter overhead are the next big objectives. Again, that seems to be a little bit unrealistic for the buyers right now, but hey, earnings right now. If there's one thing you've learned this week so far, it is that earnings can do anything they want, right? These marks can surprise you. The third thing, right? Third one is probably the most important clue right now. The day began in a bit of a choppy range, right? Not a surprise. It was not surprising to see this trading range at the beginning of the morning this morning because we had that deep pullback, right? And the buyers, of course, wanted to buy it up. At the same time, there was a gap down. The NASDAQ had gap down, so the bears kept on trying. So it made a lot of sense why it was pretty choppy there. Anyways, that trading range is a very, very big clue because ranges are magnets. Ranges are balanced markets. So imagine there's a balance right there. The market swings up, and now as it's going lower, think about how much momentum now is building. It's like a freight train as the market rotates. We talk a lot about this on these newsletter videos, right? When ranges get breakouts and they roll back down again, it's not very often they stop at the low of that range. They oftentimes will keep on going, and if there aren't a lot of buyers down here, well, this could easily end up into a big, what I call a slingshot reversal, where it just spits out the bottom and keeps on going lower. That is very much, I think, the biggest clue on this chart right now is that sheer momentum coming down. And you'll notice what I've done is I've measured the amount we went above the range. I projected that down below the range. And that's going to give us a pretty good target for the bears tomorrow, that 37.90, 37.91 area, which you'll notice is right around that prior range that we saw earlier on this week. And of course, last week's close. Remember, as we get closer to the end of the week, the prior week's closing price becomes a big psychological magnet. Fourth clue here right now is that support trend line. That trend line right there, right? That might be a bit of a problem on that pullback, right? Because we talked about how we got that big move up. They're going to want to make that run, right? You can imagine that bears are probably going to want to sell into this up around those prior highs. That trend line becomes a bit of a problem, right? Bit of a problem. We'll talk about how to work our way around this. So now that you kind of know what I'm looking at right now, now that you know what's on my radar right now, what is the most likely scenario that we have in a situation like this? Statistically speaking, the odds are good that we keep on going lower, right? That is where the odds are right now. And so we definitely have some breakouts going lower here. Like I said earlier, it's going to be a bit difficult for the buyers to step into this, right? Because there's a lot of momentum coming off of that high. At the same time, because of that strong move up, it should not surprise anybody if this market tries to go higher. And I would imagine the bears will be coming in because, again, it's a lot of momentum, right? So bears will come in, maybe try to pick off that prior top up there for a short back down. Or one of my favorite trades here is that run up and the short back down from there. That could be, in all reality, that could be one of the best trades of the day for tomorrow. So what is likely here right now is a continuation going lower down into that 37.91 area. That, of course, will get rid of that rising support trend line. There are a lot of different ways in which we can sell this market going lower. For example, let's say we get a strong run down at the open here, right, in Asia. A strong move, a shallow pullback, a lower low in price. That would be a great trap level right there, right? So let's say we open up, right, we gap down again, right? Could be a very strong move down. If I can get a real strong move down, a shallow pullback, I call it a FOMO pullback, right? If you're missing out, that lower low in price, what that lower low in price is really important because it confirms that short. Whereas like back here, right? Like back here, we saw that strong move down, but notice that we didn't see a lower low in price. If it would have made a lower low in price, everybody would have sold that, right? But instead, it made a higher low and it gave the buyers a chance to hold on to it. That's really important as we go. So strong move down, that shallow pullback, that lower low in price, as we always say, traps, baby, right? That is a good short on the way down to completing that pendulum swing. Another one of my favorite breakouts going lower would be a 1-2-3 breakout, right? Let's say, for example, here, that we take out the low of day, right there, that low there. We take out that low at the open, right? We pull back to the 21 moving average. The bears come in and they jump off that moving average, right? We call these 1-2-3 breakouts. If I can get that jump off the moving average, I'm going to mark off that low. I'm going to mark a channel off that big high. I'm going to drill down, as we always say, find those prior swings. And I always look for traps above prior swings, above the moving average. I look for buyers to come in and I can sell into their stops. For failures oftentimes turn into pullback combinations, right? We talk about this stuff inside of our free trading course on the website, right? So trap, failure, pullback. And again, we have a pretty good idea of where the market wants to go, right? For a pretty good target. So a 1-2-3 breakout, that would be a great move lower. And then you know what I'm going to say, right? The pop and grind. The pop and grind is a definite possibility as we go lower. Let's say they move lower, but they don't pull back to the moving average and jump. What happens is they move lower and they begin to grind, right? The market begins to grind down and grind down. Like I said, there's a lot of momentum coming off that high right now. So in typical situations, again, we keep in mind, we are far from typical right now, being knee deep in earnings season, the end of the month of October. But, again, all I can do is play the odds, right? Play the probabilities. So if we do roll lower and begin to grind down like that, these are pretty easy. Draw a trend line off that low, bring it up and anchor it off that high. See how I do that? It's like drawing it backwards, and then you go out and you find those prior swings. And I mentioned these prior swings because in my experience, the best entries are usually going to be just above a prior swing high. That will give us a trap entry, what I call a trap setup. And then, of course, the pullback off the moving average, it's a very strong move down, so you don't want to buy that, but hopefully the rookies will buy that, and we can use their stops as fuel for that failure and then grab that first pullback, right? Again, you guys have learned this stuff inside of our free trading course, which reminds me, if you're watching for the first time right now, if you haven't taken that free course yet, if you're one of the few folks watching who haven't learned all these entry setups, what I'll do is I'll put a link up here for you in the upper right hand corner for our free trading course. Grab that link, join the free course, take the free course, because the strategy that I teach in that free class will help you get into so many more easy winners. It'll help you avoid some easy to avoid losses, and most importantly, it'll give you a roadmap to follow, which for me personally gives me a lot of confidence. It'll help you too by knowing exactly what steps to take to find the best trades each day. If you're missing the best trades each day right now, if you're taking too many losses, take that free course. You're going to love it. It's perfect for someone trying to make the jump into full-time trading. And by the way, let me know what you guys think of it, because I get so many great, really inspiring emails every week about people making money with the free trading course stuff. So grab that link, take the course. You'll love it. Let me know if any problem along the way. So now we get a pretty good idea. There's one more thing I want to kind of point out here. One more thing you want to keep in mind. We're seeing a lot of gaps right now at the open because of earnings. Wild week this week. If we were to, for some crazy reason, if we were to get a really big move down, right? If we see a really big move down overnight, right? Think of what happened to NASDAQ yesterday, right? So if it gaps down, big move down, anytime I see a really big move, the first thing I think of is don't chase it, right? Don't chase it. So if it really makes a big move down without any pullbacks, what you want to do is start looking for a deep pullback. What I'll do is I'll look left, I'll start anchoring off some other prior swings, and we'll start finding some hidden channels. All right, I can't really put it all in here right now, right? But if we were to, again, if we were to really get a really big move down, right? Really big move down here, what I'll do is I don't want to chase it lower. I want to sell high, not sell low. What I'll do in this situation is I'll go look left, and we'll do this tomorrow morning together, obviously, but find a new low, mark up a bigger channel. And what I always tell my students is whenever we see a really big move overnight, right? If it really gaps down overnight, wait for that pullback. And the pullback will oftentimes come into a bigger channel. There'll be some bigger hidden channel, and you want to get above the moving average. And what usually happens is because the pullback is so deep, because it's a big pullback because nobody wants to sell way down here, right? No professional traders want to sell. What happens though on these big moves is that during the shallow pullback, the rookies will get in. Right? So inexperienced traders will chase after the market going lower. But as it goes higher, those rookies get pinched, right? They get squeezed. And when they get squeezed, they become buyers, right? When you get stopped out of your short position because you're selling too low, by default, you have to buy your way out. And what I want you to remember is what that will do is it will create a bit of it will start to speed up as it goes higher, right? You'll notice the pullback will begin to accelerate. And that acceleration is very tricky if you're not mentally ready for it. Again, rookies will chase after it. They'll get in way too low. As it goes higher, it squeezes those rookies out. It leads to a fast pace, right, accelerating move up here. You don't want to fall for that, because anytime we see a strong move like this, it's going to want to go back and retest that low. So don't fall for that. Don't chase after it, and be very careful thinking it's a reversal. It will feel like a reversal. The best bet is trap in those buyers who are not watching this video, trap in the buyers who are trying to call this reversal, and use their stops as fuel to go right back down to that low. These are usually very easy money-making trades. The key, though, is it messes with your head, right? That's the problem. It messes with your head because as the pullback comes, it makes you think it's a reversal. It's most often not, right? Most often not. Trapping those buyers with some failure patterns. You'll learn about failures in that free course that I mentioned earlier. So now I think we've got it covered here pretty well, right? About if this market goes lower here. Now, the obvious question now is how do we make money if it goes higher, right? How do we make money now if it goes higher? Let's grab the NASDAQ, right? The NASDAQ, again, very, very similar here on the NQ. The one thing about the NASDAQ right now, one kind of key difference here between the NASDAQ and the S&P. The NASDAQ, you'll notice there's four, right? There's four here right now, but there's a little bit different. The first one is it's more of a bear bias right now. If you look at a 4-hour chart, right, of the NASDAQ, compare the 4-hour chart to the S&P, and look at how the S&P is reacting to the 21 moving average. Again, this is the 21 moving average. I use 21 EMA on pretty much all my charts. So on the S&P right now, the S&P had a very strong jump away from the 21. The NASDAQ is still very much holding that 21, which when you become a student of mine and you take my video classes, you'll learn about the many ways in which we use the 21 EMA. One of them is to gauge sentiment. And right now, the NASDAQ is a little bit more bearish. As you can see, a bear bias rather than a bull bias that we have on the S&P. That's one key difference there. NASDAQ feels a lot heavier now. Next one here is range rotation off the high. That is the same basic idea, right? The market begins in a range. We pop up. We're rotating down now. It is very difficult to want to buy this because, as I mentioned earlier, a lot of times these things will keep on trucking and it will blow right through, and the amount above that trading range is then matched up below that range, and it creates a level of support down there, in this case around the 11,300, which you can see is right around some key areas of support there, 11,200, 11,260 area. That gives the bears a lot of the momentum right now. Then you have, of course, my favorite dance move, the old pop and grind lower. I always get a kick out of that when you guys send me comments and emails on that stuff. But the pop and grind, we talked about this earlier. Anytime we see a pop and we begin to grind down, right, what do? We draw a trend line off that level, right? And we draw a channel off that high. We look left, and what do? We find prior swings, and we look for the shorts off that channel. You have to think that is a very desirable place to sell short for the bears right now. And we're going to talk about that here in a moment. And then, of course, the next one is that resistance trend line. Now, if there is a trading god up there, right? If there's a trading, Jesus up there looking down on me, whatever his name is or her name, right? That trend line, right? That trend line, that is probably where the best entry will be, right? So if I had my way tomorrow, again, I take whatever the market gives me, right? I don't make predictions. I just get ready to react. So if we do get that real strong jump up, you have to think that trend line right there, which could be like, it could be like one, big wide channel, right? That trend line seems to be a very attractive area as well for a short. So a lot of this, again, is very similar here to the S&P in the sense that, as we go higher, you think bears are going to sell into it. As we go higher, you can see, though, it's very difficult as we go higher right now. It's very difficult to feel like, oh, yeah, that's a good spot to buy, because as we go higher, I don't want to buy up here. That range is a magnet. Right? So I can't buy there. The trend line coming down, it's very difficult. Even if we go higher here, right? Look back up top here. Here's that 11,796 area. This, of course, if you keep going back, I know it's big way back. It's a big level of resistance. We get a lot of resistance overhead. Again, a little bit more of a bear bias here in the NASDAQ. So the buyers have their work cut out for them right now. They definitely do. Now, could that change? Of course it could. Why? Because we could get some earnings tomorrow morning. And as you've seen, the market's been pretty wild this week. So be aware. Keep your options open right now. For what we see right now, though, very difficult to be a buyer here. So how do we make money on this? Shorten those pops. We've talked about the move going lower. It's the same basic idea on the NASDAQ. The one variable that we have right now is the biggest difference, I think, on the NASDAQ is they've already taken out that low. Now, there's a very small, well, I shouldn't say small, but there's a chance that they're going to turn this into one big range, right? Think about like up there, down, right? There's a chance they may turn this into one big trading range. And really, to be honest with you, hopefully that is the case, right? Hopefully that is the case because that's a juicy short, right? That is a juicy bull trap short up off that high here. So the reason why I mention this is because as we go higher, I really don't want to be that aggressive at the high of that channel. So I think the best way to do this is as we go up, anticipating the potential, this could be one big trading range here right now. What I want to do is I want to anticipate that rotation all the way back to the high. And so as we're going higher here, if I'm anticipating that move to go a bit higher, what I'll do is I'll try to rope in some of these buyers, right? Try to use their stops as fuel. Stops are fuel when it comes to day trading, at least in my eyes. So as we go higher, I love this area up here for a short. What I don't like is the fact that we might make that rotation all the way back up here. So what I'm going to do is I'm going to use that classic two-try failure, right? That one, that two, rope in some of those buyers, right? Get the buyers to try twice, use their stops, right? Use their stops as fuel. And this is very similar to what we talked about earlier on the S&P, right? Big move down, wait for the pop up, trap in some of these buyers, and then think about where their stops are, and then use those stops as fuel for what we call a failure pen. This, of course, is a two-try failure because of the stuff I just talked about, right? Because of the potential for that rotation going higher. Now, oftentimes, these failures will drop, the market will roll over, and they'll grab that first test off of that moving average. We call these failure into pullback combinations. You're going to learn these. There's a lot of examples of these inside that free trading course that I mentioned, right? So that's the way I plan on selling this on a relatively shallow pullback. Now, the reality is as we go higher, if we do get up into that trend line overhead, if we do take out some of those big tops overhead, the game plan is pretty much the exact same. It is pretty much the exact same. The one thing I like more about that though is if we do see a relatively big pullback, again, it could be the trend line, it could go all the way back and take out that high up there. If we do see that deep move, now we have more flexibility now. Remember, anytime we see a strong move in one direction, we have to what? Respect the buyers, respect the odds. They're going to come in and retest that high. So in that situation, I want to use that to try failure because again, we have to anticipate they could be trying to run this thing back up to retest the high. So trap in some of those buyers, use their stops as fuel, and then because we have such a huge amount of space back down to that low, which is where we anticipate the bears want to get to, now we have a lot more options to work with. We look for that signal candle coming off the moving average, and we look for that drop going down. Now, oftentimes, when you see a really big pullback like that, and everybody gets trapped in, we get stuff like this, right? Where it really dumps, right, off of that high. When that happens, look left, find a new trend line off those lows, mark that trend line off that high for your channel, and then again, as I always say, look left, find those prior swings, and look for that short off the high of that channel, right? It's a two-try failure. Again, because the strength of that pullback. And again, this could be a trap, it could be a failure, it could be a pullback combo as we go. Now, keep in mind, this sequence right here, that sequence, it could be applied there, it could be applied here, it could be applied even higher. It really could, right? Because again, there's a good chance here they're going to make this out into one big trading range. So even if we do end up all the way back up, right, it's still a horrible place to be a buyer. Trap in some of those buyers because of the strength of it. Let them try twice. And then once those stops get hit and we start getting that roll over, find that new channel and be ready. As I tell my students, Sometimes you don't get a great failure off the high, but you don't want to miss that first pullback, right? You don't want to miss that first pullback there. That will almost always be a winning trade. Now, what would it look like to be a buyer here? How would I be a buyer on this? Well, we would have to go up, take out that high. We'd have to hold the pullback and keep going. Right? This is, again, it doesn't seem very realistic right now, right? We'd have to go up, hold the pullback, and jump, right? Jump. And again, doesn't look very likely right now. So we've talked about some breakouts earlier on this week. I'll leave it off for now, right? But be aware, though, we have to go up. We have to hold that pullback and really blast, right, with that 1, 2, 3 breakout. If you've watched the videos so far this week, you know the breakout patterns I like to use. We'll cover a little bit later on in this lesson, right? So now we know the game plan going lower. We know the game plan going higher here. We'd love to get some bull traps there on the NASDAQ. And again, the same thing is happening for the S&P, right? Same thing is happening. Now, here, hold on. One thing about the S&P, okay? One difference here. I started to miss this, started to wait here on this one. But that trend line, right? So if we do get that run up on the S&P, I still want that 2-try failure. I still want that 2-try. The one difference, though, is you want a trap. Now, why a trap entry? Because of that support trend line. That's the one difference. That's the one difference there, right? If we go up, it's still going to be the 1 to back down again, right? But if all we get is that kind of shallow pullback, right? If all we get is that shallow pullback up into this range, again, that trend line becomes a bit of an issue, right? So when you go up and get 2 tries, you want that trap entry, because a trap entry will allow me to avoid selling into that trend line. All right, I left it off earlier. I want to make sure I circle back on that. I get your back. I get your back on that. So just be aware of that entry. And if you watch my videos a lot, you know that pattern pretty well already. We've talked about that many times here over the course of the last week. Last but not least here, over on the crude oil. Okay, this is the tough one tonight. The S&P and the NASDAQ are pretty straightforward overall. This is the tough one. There are 3 key insights right now. First one is a mixed bias. Now, I've been talking about this for a while now, right? We had that big run up in October. We had that huge, I mean, look at how much space there is. October's high, right? Look at a 4-hour chart right now, and you'll see that big blast in early October, late September, early October. That's that high right there. That big blast higher is why I keep saying, remember, anytime we see a real strong move in one direction, what do we expect? We expect at some point they're going to make a run to go back to retest that level and then potentially back down again, right? Those strong moves, they act like a magnet, right? They love to get retested. So that strong move is right up there, again, around that 92.63. So the buyers have a lot of the edge right now. The reason why I have a mixed bias here right now is because of this. yeah, that little guy right there, right? What is that? That's a range, right? That is a nasty, nasty quicksand range. It's a huge range, right? This whole area right there, right? This whole area basically around 85, right? It's a huge range. And so it's very difficult right now. It's very difficult to trust this breakout. I talked about this last night, right? You've got this huge range down here. And I get it. The buyers want to go back to retest October's high, but I just don't trust this breakout. Not with that huge range right below me. Now, I might be eating those words tomorrow, but that is a big concern for me. That is why I have this listed as a mixed bias, right? And that's one of the more challenging parts about this market right now. Now, here's the big variable for tomorrow. Okay, this is the big variable for tomorrow, and that is, I forgot the big one, right? The second one, the big move higher, right? This is a big move higher, right? It's a pretty big move. It's definitely not the big $7 range we saw earlier on this year, but this is almost a $5 move, right? Yeah, it's almost a $5 move. It's $4 and change right now. That's a pretty big move. Anytime we see a big move without any real meaningful pullbacks, and we talked about this last night, what happened last night? Right, we saw that big move up on the S&P and the NASDAQ yesterday. NASDAQ, they made that big drop, which was very scary because it gapped down and everything, right? And then it made its way back up to retest the high. So the exact same thing we talked about last night. Anytime we see a really big move in one direction, we know that the buyers in this case, they might look at this and say, you know what? I don't want to buy way up here. This is way too high to buy right now. I'm going to buy a deep pullback, right? And that's definitely something on our radar. Now, this is where things get interesting, because if they get that deep pullback, it's going to put them underneath a big time prior high. So a deep pullback right now, is not what these buyers want, because if they get, like for example, if I had to guess right now, I would guess like that area right there, 86.60 area, that would probably be where that deep pullback would be. But you'll notice it's not a very good buy zone, because again, we find ourselves underneath that prior level. It's a really difficult, right? It's a very difficult situation to buy there. And then you got the big variable, right? I kind of hinted on this earlier. It's the range. This range is really, in my opinion, this is the big question mark that I have right now, because if it is a range, now I might be making nothing out of making something out of nothing right now, but it looks like that is a range right there. Now we just talked about this, right? What's going to happen if we go up into a trading range? We jump up and then we get that deep pullback. What happens when the market rotates off the high like this? It becomes a freight train. Now given the buyers have a great shot to hold this, right? They can fend off those bears, and I think that's a decent long trade for tomorrow. What I think is the best trade for tomorrow, I'm not sure if we're going to get it or not. And the best trade for tomorrow, though, is as this freight train, right, begins to truck its way lower, this thing spits out, rolls lower, and we get some sort of hidden channel, and we get one of my favorite, right, shorts off the top of that channel like that. If I had it my way, right, if there is a trading Jesus up there somewhere, I pardon the term, I pardon the joke. I don't mean to joke around about that stuff, but if we do get the cards the way we want them tomorrow, right, then of course that short off top of that channel would be a beauty. It'd be a beauty, because again, you get that weekly range down below us. So I think this range is a big variable. I also think too, if we go higher, right? If we go higher, now keep in mind that 88.72 level, it's a big level, right? It's not the big high we talked about earlier, but if they can go higher, right? If the buyers want to keep this going higher, now that trading range becomes an area for a breakout pullback, right? So that trading range to me is a really big part of this. If we go higher, we wait for that breakout pullback. If we go lower though, that's where things become very interesting. So kind of, keeping along with what I said there before, it's tough. This is a tough one. It's tough to tell what is most likely coming next. On the S&P and the Nasdaq was pretty straightforward. And again, with earnings coming on Friday for these big energy names, who knows? As we go lower here, again, I could easily see this being, some bigger channel. Again, deep pullback. What you'll have to do though is trap in these bears, right? Because again, that's going to be a lot of momentum coming off the top of that trading range. And again, that prior high, I just can't imagine you're not going to see a lot of bears coming in and try to short this thing, go back into that range right now. So we have to really kind of rely on those bears to get trapped in, use their stop losses, right? And then buy into those stops. Now, think about this pattern. Okay, these are higher lows. Okay, for example, if we roll lower and we start making lower lows, it's on. Okay, then it's on. Then we go trend line off that low, channel off that high, right? If we start getting lower lows, that's that pop and grind, right? And that's where that range comes in. Or maybe the market completely falls apart, strong move. If that happens, it's a giveaway. It's an easy one now, right? If it really cooks and really collapses down, strong move, shallow pullback, lower low in price. We talked about this before, right? The lower low is necessary, and that will give you that trap. Okay, and you might get lucky, right? This might be a channel high as well if we play our cards right? But that trap, though, it's a great trap short if we can come off of that high. Again, as we roll lower, we have to trap in the bears. They will try to sell twice at higher highs, right? Bears want to sell high, bulls want to buy low, right? So as they come in and they try to short this thing, the stops are your best friend, because you need those stops to give you the fuel, right? Nope. Okay, it was a pun intended, right? A bit of a joke in there, right? But to give you fuel to go back to retest that high, which is it's a decent trade, but again, there's a lot of concernings that we have about things talked about already. What I'd like to see is it pops lower, it begins to roll lower. And that to me is a much better trade, because now you've got all that juice, right? All of that gravy just waiting to drag this thing lower back to last week's close, back to the weekly range. So that would really be a great scenario for tomorrow. We'll see if we get it. And again, if we keep going higher, right? If the market kind of keeps on grinding higher here, what I'll do is I'll start finding new channels, right? Start finding new channels, start looking at these, what was prior resistance, to use as support, right? What is resistance right now will become support. Wait for that pullback, and we go into the old trap in the bears, under the moving average, get that failure into pullback combination from there, right? So if we do keep going higher here, I'm going to keep adjusting this channel, right? Because you can see this channel is probably going to be a bit useless, right, if we go higher. So if we go higher here, I will adjust that channel out. If we happen to really blast, right, if we pop up, we pull back to that moving average, we jump off the 21 moving average, right? What do we call that? We call those 1, 2, 3 breakouts. You mark off that high, you mark off that low, you find those prior swings, right? And you grab whatever entry pattern you can find, right? Trap, failure, pullback combos off the low of that. And then don't forget, whenever we see a 1, 2, 3 breakout pattern, the size of the first leg, the size of the third leg, those are usually going to be equal, right? That'll give you a good final target as we make our way higher. Because as of right now, we're at 88. This is it's not a huge outrageous move, but from 88 to 92, again, it's a four and change. So they'd have to do this. They'd have to put another day, right? It's a pretty big move. The idea they're going to go $4 up again tomorrow does seem a bit unrealistic right now, but hey, big time earnings later this week. So watch out for that breakout, that pullback, find that new channel, right? And then we're using the levels of resistance now as support, get underneath the moving average, trap in those bears, and use their stops for fuel for that failure into pullback combination as we're making our way back up to retest that high. And then from there, who knows, right? Could be a 1, 2 back down again, as we talked about many times already in this video on the S&P and the Nasdaq. So you know what I'm hoping for tomorrow. Obviously, my goal means nothing to the market, though. We'll see if we get here overnight, and we'll see if we get that kind of slingshot reversal that does look likely here for the crude oil. We'll see what we get, though. We'll see what we get here. Very tough stuff right now on oil. Nasdaq and the S&P are relatively straightforward. The game plan's ready. The game plan is ready. Tomorrow now, we're going to come back and we'll trade the plan together tomorrow morning. Don't forget, we open up a trade room. We trade together every morning in our morning trade room, 8 o'clock Eastern time every morning. I would love to have you there trading right along with me. If you're missing too many good trades right now, if you're taking a bunch of losses, if you're making too many mental mistakes, I'll be there trading with our students every morning, 8 o'clock Eastern time. You're going to love it. It's a great place to make sure you're doing everything the right way and not making some of the classic rookie mistakes that we all fall into while we're learning on our own. So get registered. I'll put all the free course stuff in the description. I'll put the membership stuff in the description. Don't be afraid to call the office. I'm always here to help out. If you guys have any questions, the fastest way to get help about anything I've talked about tonight is to call or email the office. We also, of course, have live chat on the website as well. And although I don't usually answer questions fast, very, very quickly on the comments, you can always drop questions in the comment section below. But be aware, I don't have a chance to get to those as often as I would like to. So call, chat with us, right, or send me an email, and I'll be there to help out. Lickety split. All right, guys, have a fantastic rest of your day out there. Thank you so much for tuning in tonight. I'm a little bit late here on this. Is it Friday yet? Is it Friday? I can't wait for the Phillies to win the World Series this year. There's no way I'm rooting for the Astros, right? There's no way I'm rooting for. I mean, I love the city of Houston, but not what the Astros did. No, you can't get over that stuff just yet. So go Phillies. I'm excited for Friday. We got the World Series starting here. Great time of the year to be a sports fan right now. But get out of here. Enjoy the rest of your evening. I'll see you tomorrow, 8 o'clock Eastern time. Be well. Be nice to each other, or be here tomorrow night. We'll do it again. As always, adios, amigos. Bye-bye for now.